Hey, this is Sasha. Welcome to another episode on Hungry for Returns. Today we have another question specific regarding fear, greed, taking profits, making more money on the stock market. So if you have a question regarding trading, stocks, investing, options, that kind of good stuff, and you want me to answer it on video, submit a question by voice or by video, and you might be featured on the show. So I try to go detailed on the answers and answer them on video for you. So take a listen and let's hop to the screen.
Hi Sasha, I have noticed that every stock position that I close for small profit and then get into it again for more turns into it and makes me lose all that profit and even worse. Is it just bad entry timing or is it the old fashioned greed that gets in my way and what should I do?
All right. It could be both. It could be both. I mean, fear, greed, all these kinds of things, they play in emotion. So here's the thing, when you look at accounts and you start looking at these accounts, some of these profitable, some of these are not profitable. Others are coming up to being a losing position soon. I'll show you one of the trades we talked about this last week. Amazon. I set this up to be kind of more of a sweet spot. Here's an option trade. I'm not sure if you trade options or not. But in this option trade, it's getting outside the range, right? We were up a lot more. It was over here. Now it's over here. So if I had, let's say, 5 contracts, I probably should have been taking off one into strength. Take off one, take off another, take off a third. So with time, if you're already having profitable positions and then they turn into losing positions, then yeah, absolutely. You're trying to hold things longer than you should. This business is about taking money off, right? You make money when you sell. So in this case, you got to take it off. So in here, if you start with 5, you take one off, you take another off, you take another off. If you're doing something else, let's take a look at Microsoft here that I purchased a while back. This one's profitable about $7,000. Now, it's got that 300 shares right now remaining, but I started with about 500 on here. This one's up about 7,456 right now, right? So the way you approach this is, okay, so in this case, let's say you start out with 500 shares. Well, what you do is you go ahead and you take off 100 after it goes up a little bit. And you take off maybe another 100 a month later, a few weeks later, depending on your trading style, right? If you're a day trader, no difference. You're just compacting that into 6.5 trading hours. Then again, goes up a little more, take off another 100. Pulls back. Let's say you got a major crash that happens. It drops back down. Hey, now you got those 300 shares. I might add 200 of those, not the full 300. Drops a little more. Maybe I'll add another 100. That's the point of money management. This business is about risk and money management, right? So know what you're putting on the table, know what you're putting on the account, and manage your money. That's what you need to do, is take money off. If you've had, I mean, just by the sheer luck, if you did 20 trades, eventually one is probably profitable. And if those profitable trades are turning out to become losers eventually, well, you're just not taking money off into strength. So your goal in that case is to take money off. If you're starting with 1,000 shares, take off 200 every time, do it 3-4 times, and you're out of your position, right? Now it's different if you did 20 trades and they're all losing. Now you're probably not picking the right stocks, or you're not getting in at the right time, or you're trading too large for your capabilities. But if you've done, let's say, 20 trades, I would assume by then at least 2 are probably profitable because you're trying to make smart decisions. So by then, you got to be taking money off as those are profitable, as they are working in your favor. As they move, like here's Coca-Cola, got the other day, and as they move in your favor, you take off a few shares. So here, if you're starting with even 50 shares, take off 5 or 10. That's just learning basic money management, risk management, and so forth. So it doesn't matter whether you trade options. If you're trading options and you're starting with 2 contracts, you take off 1 contract. If you just got 1 contract, then, well, you take it off. When you're kind of somewhat profitable, you might need to do it earlier. If you're tight and you can't take off half of a contract, then you take off the whole contract. But if you can do 2, you take off 1 contract, you let the rest ride a little more, and you take off the other one. But at least then it gives you that extra little cushion. So I hope that makes sense. Not about fear and greed. Yeah, those play in, their emotions, they kind of suck in trading, but they're great in personal life because fear, they allows you to stay safe, right? If you're afraid of a bear that's coming in, it allows you to protect yourself. It's a defensive mechanism for you. Greed, it's also good for you. You know, a lot of people say greed is bad. It's good for you because it craves and desires things. Hey, I'm greedy. I want to have kids. I'm greedy. I want to have great times with my family. Is that a bad form of greed? Some people may say. But hey, it's a desire. It's a want. Now, if you just want money to have money, that is a bad thing. But if you want good quality time with a sick loved one, what's wrong with that kind of greed? Anyway, thank you so much for joining me. Hope you have a wonderful day and week ahead. And if you enjoyed this video and you want to subscribe to YouTube, hit that face and be sure to ask your own question by going to the website, and then you can submit one by voice or even just writing in. Thanks for joining me, and I'll see you next time.